The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners out there are having a profitable trading week. It's certainly been a tumultuous one, so there's a lot of activity, a lot of opportunities out there for the savvy options trader to get in and either hedge himself or make some profits in these tumultuous times. My name is Mark Longo from theoptionsinsider.com, as well as many of the programs here on the Options Insider Radio Network, and I am joined by our usual motley cast of characters for this episode of the Option Block, starting off with the man holding down the OX hot seat, none other than Big Tim Navabi, Mr. T-Nav himself. Welcome back to the show, Tim.
You know, it's Big Rob Kurtikowski, and it's handsome Tim Navabi. You should know that.
I'm mixing him up on purpose. I threw Tim a curveball.
That's what threw him off.
I threw Tim a curveball by tossing it to him first. I thought that might.
I know. Well, and it's handsome Tim Navabi. That's what he does.
All right, you ready there, Tim?
Yeah.
Let me try that again. Welcome back to the show, Tim.
Yes.
Yes.
Yes. I'm sorry. I'm trying to too much. I'm trying to get some other headset on here so someone can listen to this, and it's just not working. Like we're off, we're on, we're off. All of a sudden, he's got it. I don't have it. So I'm really sorry.
That might be the best thing we've ever had on this show.
Dare cut that.
Yes. Yes.
No,
I love it.
Cut us off.
Welcome back to the show. Yes. That is great. All right. Tim Navabi indicates affirmative, and now we are also joined on the rotating Options Express panel by good old George Kachuk from Know Your Options Inc. George, welcome back to the program, sir.
Good afternoon, Option Gurus. Always a pleasure to be here with you guys.
Always a pleasure to be joined by you, George. And last but not least, we have the Greasy Meatball, a.k.a. the Sea Bass, a.k.a. Mr. Slinky himself, good old Mark Sebastian from OptionPit.com. Mr. Sea Bass, welcome back to the program. Are you also yes today?
No, I am not.
So we have one in the affirmative and one resoundingly negative response so far from the panelists today. So we're off to a rousing start. And with that, we're going to dive right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is, of course, the portion of the show where we discuss the activity that is moving the market today, and it was a day to the upside today, where we saw most of the indices taking back some of the gains that they surrendered yesterday. We saw the S&P up about 11 handles overall on the day, or nearly 1% to about 1240. The Dow up about 113 to 11,893. The old tech-heavy Nasdaq, a bit of a laggard today, only up about 3.5 handles to 2625, and the good old VIX cash down about 3.3 handles, or nearly a little over 9% to 32.82. Why don't we start there, Mr. Seabass? I know you posted up an article on the Options Insider today, as well as your blog, discussing people flocking in to gobble up some net units here in SPX these days. So why don't you tell our listeners a little bit about what you wrote about today in that article?
Yeah, well, it was really interesting as I was looking over why the VIX was up so much yesterday. Because, we had a really cruddy day yesterday. We were down 48 handles, but I was looking, I was like, is this really 9 points on the VIX? And so then I kind of pulled up where the volume was, and over 20% was in the front 2 months below below the 1,000 strike. And that just got me, and then I looked a little deeper into the vols, and that way out of the money stuff, the volatility was up a lot more than even the 1230s, which were kind of out of the money to at the money. So that is a very wary sign. And then I'm also looking at kind of credit markets and insurance markets, and they're all pointing toward, I think we got a little more to this. Now, I would expect kind of us to have kind of a breather today, which we did, but I'm still not a huge. I still don't have a lot of confidence until we see bond. It's interesting, Mark. I actually called this sell-off on Monday, basically said, here's why I think we're going to sell off. You saw option volatility on VIX going up, even as the VIX was dropping. We saw option volatility on the bonds going up, even as the bonds were selling off. We saw option volatility going up on gold, even as gold was selling off. That is volatility on on the insurance products. So insurance, on being able to get insurance, was way up, and I'm noticing that turning into a very consistent leading indicator. These markets, the credit markets and the insurance markets, have been far better than the equity markets at actually being forward thinking. The equity markets are running around like a bunch of like a flock of sissy girls. They have no idea what's going on. It's like
a flock. Is that the unit measurement for sissy girls?
Yeah. Imagine a girl sorority, and one girl wakes up and there's a spider on her face. That's the way the equities act.
I thought a group of sissy girls was more of a pod, but perhaps that's me.
You're right. A pod of sissy girls. I apologize.
But
my
your terminology is all askew.
Apologies for the poor colloquialism for sissy girls.
But yeah, we've discussed this on the show in the past a number of times. That's one of the reasons why I wanted to bring this up now. That movement, that activity we see in the downside SPX skew, that to me is always one of my barometers that I look to whenever I'm gauging the sentiment or the health of a particular rally, or people ask me, what do you think about what's market levels right here and that sort of thing. And we've talked a lot earlier in the year about how the pros were just gung-ho to sell premium down there whenever possible, even at times you think they should be a little more reticent than they were. And now we're seeing, we actually see net buying down there, then that just when the degenerate premium sellers who seems to live in those strikes, even they back off and start picking up some net units. That's definitely a sign for anyone out there to be cagey about what's coming up going forward, and that even these, like we like to joke, these degenerate premium sellers are buying units. Then you probably want to have some net units on your side as well, and perhaps have some caution going forward for the positions you're looking at.
And just be aware that the equity markets are probably the least forward-thinking markets out there. If you want to know what the real odds of something bad happening, don't look at the SPX at 1280. Look at the fact that bond yields haven't given off, or look at the fact that implied volatility on VIX, not VIX itself, but implied volatility on VIX is going up. Those are much better indicators. Equity markets have more and more become very, very poor at pricing in certain types of risk. So I mean, it's been kind of silly. So speaking of pricing and risk, how about Apple and Green Mountain today, Mark? Or were we going to talk about those in a little bit?
We was going to get to those in a little bit, but we can dive into those now. Why not? Of course.
What do you think first, Green Mountain or Apple?
Let's do Apple because Apple is such a big part of the show on a regular basis. We can't relegate it to second fiddle status behind Green Mountain just yet. Of course, Apple had an uncharacteristic sell-off, let's call it today, down about 2.5% or a little over 10 handles to close the day at 385.22. Now, we've discussed Apple's vacillations a lot in recent shows. They seem to have a peg or a glue around that 400 handle, and they'll vacillate around it. They'll gap down a little bit to these levels here and below. They'll gap up to the 410, 415 range, but they seem to have a lock, at least for the time being, on that 400 strike. You think they're giving up that ghost finally, Mr. Sebastian?
I'd be interested to, I think there's definitely some selling pressure. There was a couple of reports out there saying there are some more supply problems. Demand has been a little, no one's 100% certain how good the demand is for the iPhone 4. There's still belief that there's an iPhone 5 out there. You've got Amazon coming out with the Kindle Fire. There's all sorts of things. And, Apple just maybe it needs to take a nice kick in the shin every now and again.
I view Apple kind of like when I view the VIX futures. I have the same sentiment for Apple. I think long term, I see a sell-off coming for Apple. I'm definitely a long-term bear, but in the near term, this thing could do just about anything, and I would not be surprised. I see it hanging around this 400 handle, having these sort of vacillations for a while. I'm sure if you're a premium seller in the 400 level and you have some cojones and you're a good scalper, you could perhaps you resist the urge to hedge, then you've done all right so far. But I don't think I would be a net premium seller here in Apple right now, because I do think the trend is to the downside in the long term. Whether it heads that way right now or not, I agree. Amazon Kindle Fire is definitely the thing they're looking at in their rearview mirror right now. But whether that impacts them near term or not, I mean, they're getting so much exposure off of the untimely demise of jobs and all the other things that go along with that, negative or positive. There's just been so much Apple in the news lately that it can't help but drive attraction to their stock. Just anecdotally, I've talked to about 4 or 5 people recently in the past week who are lifelong PC users who've since switched to Mac for whatever reason for the first time. So there still is that influx going on, and a lot of that.
Yeah, I mean, you're seeing that, but my thought is that for some reason Apple located in California is starting to smell a lot like the Big Apple in New York. In other words, New York, great city. I wouldn't want to, sometimes it has some very unique smells, especially if you're going out on garbage day. And I am not a lover of this stock on any level, but I certainly think that, I have trouble imagining it going below 360 in the near term or anything like that. But
George, you're a technical guy, and I know you guys have big holdings at KYO in Apple. What's your sentiment here? Do you believe in that, or do you buy into that there is sentiment around that 400 level, or do you think they're heading lower sometime soon?
I'm going to have to agree with you, and I think it's going to go a little bit lower. I've kind of always viewed Apple as a little bit of a kind of proxy for the whole NASDAQ market. And, it's been gyrating up around here, and your up days were kind of lower volume. We had a few heavier selling days, and then today, basically, look when it broke that 50, probably a lot of shorts jumped in on that, because I know a lot of guys that were talking about that who managed some good money. So that doesn't look very healthy for the market. And then remember, Apple's one of the big leaders. We had Netflix, GMCR. They were also big leaders, and they're breaking down. And Apple was the big leader. So if it starts breaking down, that doesn't look too good at all.
I would say GMCR is a little more, and Netflix are a little more than breaking down.
Right. Well, it's probably nice.
I don't know what you call that, but it's a little more than breaking down.
The arrow has turned to the downside. The red arrow is signal
That's like calling Michael Jackson slightly dead.
Yeah, but I personally I wouldn't short Apple because it's still Apple, and its valuations, they're cheap, so it can just very quickly turn around on us here. It might go down its 200-day right around that little 362, 364, and pop right back up. That's a tough call, but right now it's telling us things aren't so good.
Apple is very much, and to continue that VIX analogy, Apple is very much like the VIX, where you mathematically perhaps the VIX should not be sustainable at these levels. The same thing with the Apple probably, unless you can make a fundamental argument for Apple being around 400. But on the flip side, you have to factor in both of those, the ridiculous sentiment levels that hovers around both of them, and the fact that you have some crazy actors playing in and around both of these names that tend to make these things perform in bizarre and oddball ways. And you're right, the people have the diehard zealots for Apple won't give up the ghost, and you can see that in their upside skew even now. Tim Navabi saying no. Tim Navabi coming on with a negative. So Tim Navabi, what are your Options Express customers doing right now in Apple?
Sorry, maybe I think I just miscommunicated there. But no, what I wanted to say. I thought it was
another one of your one-word sentiment indicators.
That's efficiency and minimalism is kind of what I'm all about here. No, I was going to say kind of that everything that you guys have been saying really is just has been shown up here. On the order desk. I mean, everything, including Apple. So, if we go and talk about Apple like we are, the buys aren't there. We don't have people rushing in and just buying calls, just playing Apple to the upside. I mean, they are few and far between. They're not here. And kind of same thing with what Mark Sebastian was saying earlier on about kind of the overall picture of the equity market. And, just the buyers really aren't showing up. We'll get busy, a little rustle, a little crazy for a little bit, and then all of a sudden it'll die down for 45 minutes. And then, we'll get real busy for 15 minutes, and then it'll die down for 15 minutes. So, it just doesn't seem like there's much conviction here in the equity market.
I agree. And of course, the other name here that is on the docket for today in terms of just turning, what did you say, George, turning to the downside a little bit today? I forgot what your euphemism was for it, but it was Green Mountain Coffee Roasters. We've discussed them on the show a few times in the past on the old Odd Block for some interesting activity.
And I've said sell.
And then we haven't talked about them in a while. And of course, if you did sell, you're looking all right today. Unless you were a downside premium seller, then you're not too happy. This one looks like, to say they disappointed on revenue might be a wee bit of an understatement. They closed today at nearly $41, down about 26 handles, or about 40% on the day. So to say that they disappointed is a stark understatement. Perhaps they are following the Netflix Widowmaker path here. Were you active in GMCR at all going into earnings, Mr. Sebas?
I had a put spread, and I had several of my clients, and we were all looking at short. We had a combo. We had a group of guys that were short, like the November.
You were short combos in GMCR?
Yeah, just short a lot of different things.
I was going to say, but if you're short combos, then dinner is on you tonight.
A couple guys had the 50-40. I had a few people that had the Nov 60 Dece 52.5 1x2 put spread on that worked out really well. We had just a plethora of short positions, but nary a person was long. We were looking at this thing as, it was just an ugly pig. And Green Mountain acting, as I've tweeted today, Green Mountain is acting more like a green energy company, and it's flight to zero.
That's unusual. You must have smelled blood in the water for you to go in so heavy on the long premium into an earnings like this. That's a wee bit unusual for you. Yeah,
you could just smell it. It looked awful. So, and very directional. Normally I'd go non-directional too, but you could just smell the ugliness in this one.
And in related news, Green Mountain just announced that they are starting a Quickster DVD rental service. And so they are following the lead of Netflix in all ways, shapes, and forms. But yes, Green Mountain looking pretty ugly. Before we close out the trading blog, either Tim or George, have anything you want to add here on Green Mountain?
No, congrats to Mark for going short, playing earnings roulette. I kind of thought actually beforehand that all the downside had been played into that, so I was just basically staying away from it. So I like Mark's gumption for going after it.
You're right.
Yeah, same thing with like you guys have been saying, in Netflix and GMCR, I mean, it's the same group of people trading the same thing here, and it hasn't really worked out for them.
Yeah, so. Not exactly a bullish explosion here in GMCR. So yes, that's going to do it for the old trading block, and now we're going to dive right into the odd block.
The odd block.
All right, and welcome to the odd block. This is, of course, the portion of the show where we sit back and parse the interesting and or the unusual options activity that is lighting up the tape today. Since we did just discuss GMCR, I might as well throw them into the odd block really quick as well, just to do a quick rundown of what options activity we're seeing. Not surprisingly, we did see an explosion of trading in about 10x in GMCR options. They usually do about 28,000 contracts a day. They did nearly 250,000 today. And just a sizable bearish activity here going on in GMCR with so many contracts going up. It's no one trade we can outline, but just a not surprisingly sizable explosion. A lot of net short deltas on the day here in GMCR. So a lot of bears playing in GMCR. The same cannot be said, however, of our first official odd block entrant, eBay, or as Tim Navabi knows them, eBay. And, of course, they closed today at $30.75, down about 43 cents, or about 1.5%. And this is a name that's had some interesting vacillations of late. They do about 22,000 contracts a day. Lately, they did nearly 62,000 today. So, strong day from a volume perspective here for eBay. And the bulk of the activity today came in one ratio upside call spread that was financed by a sale of some downside puts. We saw a trader coming in picking up the 30-34 call spread, and he did it on a ratio, a 1 by 1.5 ratio. So he did it 5,600 by 8,400 times for a netting out to about $2.04. And then he turned around and blasted out 8,400 of the Jan 27 puts for $1.03. So he essentially legged into a 1 by 1.5 upside vertical here on eBay for about $1. And not a bad trade if you like the upside here in eBay in the near term. I like the way the trade is structured, perhaps a little more than this underlying sentiment that goes along with it. I'm not exactly an eBay bull. I know they've had some issues of late. They're really trying to rebrand themselves as a destination for people coming in to buy new electronics. If you've seen any of the ads they've been running lately, they're trying to say, hey, come to us to buy a new laptop, buy a new cell phone. Everyone knows of eBay as a place to come in and buy used stuff. So they're trying to rebrand themselves. I'm not sure how well that's going to work. This guy obviously is a bigger fan of that than I am, and also not afraid to pick up some eBay down at around the 27 level here. Mark or Tim, you guys watching eBay at all? What do you think of this trade and this trade's chances here?
I'm not the biggest eBay fan either. They've got like their group of users that just love eBay, but I'm with you here. It's a smart way to structure a trade. I'm a big proponent of digging in and structuring trades the right way and taking the time to really make things work. And this is a pretty smart way to go about getting along, I think.
I first thought this might have been KYO because they love the ratio, but then I realized the ratio was far too small for them. It's got to be about 1 by 4. 1 by 4,000 is the typical ratio for the old KYO boys. 1 by 1.5 just doesn't ring the bell for them, doesn't move the needle. Of course, this could also be an earnings play. They have earnings 2 days before expiration in January, so this guy could be looking at earnings as well. It'd be an interesting way to structure yourself ahead of January earnings. I think this guy's got a little bit looking for a little more action before earnings, though, for this trade to pay off. Again, interesting way to structure this trade and to get long. Not perhaps maybe the sentiment is not exactly up to snuff. George, you're a fundamental / technical guy. What do you think of eBay's chances here?
I think I kind of look at them as like sort of a laggard. It seems like they've had their day in the sun. They just kind of moved sideways for a long time here. Their earnings are consistent and everything, so they're a good company, but they don't have to me, they don't look like they have a wow factor, a pow that's going to get them going again. Who knows if they announce some new earnings, there may be some, but just looking at their history right now, they just don't have anything that's super exciting going on for them right now.
You mean eBay isn't your destination of choice when you want to buy a new TV or a new laptop or whatever device?
No, if that's the way they're rebranding themselves, I haven't been made aware of it, as you've been saying, meaning anyone I talked to who used to sell a lot on eBay, they pretty much said like they're giving up on them. They just don't like the way things have been happening. There's been a lot of different changes, meaning their pricing and things like that. So that's about as much as I know about that. So, and then just looking at the chart and their earnings and everything like that, they're consistent, but they just don't have that wow factor. And the stocks generally just lagging kind of the rest of the market, not really doing anything one way or the other.
Yeah, I kind of expect if I had to bet on which way this trade would play out, that this dollar will end up, even though it is a good way to structure the trade and it's a decent price, this dollar will end up coming to naught unless this guy can scalp pretty aggressively.
Maybe he's actually doing this against some sort of short position.
It's possible. It's always possible.
You just never know. That's the thing, traders. You can think. Like, none of us really think that this has a additional piece of stock, but you just never know, is what it comes down to.
We can always hope.
We can always hope. There you go.
I hope that there's a savvy element to come and save him in the end. And then moving on to Computer Sciences Corp, ticker symbol CSC. This is a IT services provider. They do a lot of business with the government, and they had a disappointing forecast yesterday. They gapped down about 15% yesterday, and they were down about another 10% today. They closed at 25.24, down about 2.66 handles, or about 9.5%. So not exactly bullish times here for CSC. And a lot of times in these types of names, we'll see people coming in to position for a near-term pullback in the stock. That is not the case here in CSC. People think there's a lot more downside to go, despite the fact that the stock has been pummeled pretty heavily over the past 2 days already. We saw a lot of activity starting off in November in the NOV puts. We saw some smaller trades, about 700 of the NOV 25 puts getting picked up for about 58 cents, and about 400 of the NOV 22 halves going up for about 15 cents. Of course, this is the name that does about 2,600 contracts a day. They did nearly 10 times that, or about 23,000 contracts today. But the heavier activity came in the December puts, where we saw one block of a 5,000 lot, which is 2 times already the ADV of this name, coming in on the D's 20 strike, picking up 5,000 of those for 30 cents each. The D's 22 half puts, we also saw nearly 2,000 of those, lighting up the tape, about those being picked up for about 59 cents a piece for those. So a lot of bearish activity. Of course, this comes on the heels of today. The stock was cut yet again by another analyst down from underweight from neutral. So that also fed some of the bearish activity here. So if you look at a chart of this name, this is off 55% from its high, 52-week high back in February. So not exactly bullish times here for CSC. And if you believe the options paper going up today, the worst is yet to come here for CSC. George, Sebas, or Mr. Tinav, you guys have any? You guys watch this one at all?
I haven't watched it.
A little bit here.
But anyone that does business with the government, kind of, signing a deal with the devil. Maybe that's what they got. I don't know.
Maybe they're on the losing end of this super committee. Who knows? But this is looking pretty bad. I don't want. If everybody's buying puts on this thing, you know what we should do, folks? Buy puts. Follow the smart play. Smart paper. Follow the smart paper, my friends.
We had a company that I think we all know that bet on the government debt of Europe, and look where it got them. So, you can't bet.
Yeah.
Gotta be careful when you
That's
play with the government.
Savvy Mr. Corzine. Digging the hole deeper for everyone in the world of derivatives and just feeding the fire for those Occupy Wall Street boys. Okay, that is going to do it for the On Block today. And now we're going to roll right into the Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OX Radio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is, of course, the portion of the show where Mr. Tinav takes the reins and lets us know in monosyllabic terms what is going on over at Options Express. Mr. Tinav, what is going on at OX today that might interest or indeed intrigue our listening audience?
Well, did you guys know that FAS did its reverse split today? Today was the effective date of that. No,
I did not. I don't trade FAS very often. I'm looking at it here though. Yeah, up 400% today. The ticker says.
Incredible.
Yes.
What a gain.
Yeah. So there's some people, they had some $10 calls last night, and they're like, how come I don't get the gain here? What's going on, right? Stock's up 400%. My $10 call should be worth something.
Sounds like some of the calls you might have had when a certain broker announced a special one-time sizable dividend on the and people had the puts and thought they were printing money and going to be buying vacation homes. I thought they would have learned after that. You're saying you got similar calls today then, huh?
Yeah, we got a lot of calls today on FAS today. People didn't really know what happened. They see the price of the stock, they see their strike price, and they're saying, what's going on? So again, the subject is adjusted options. It's just not a good. Well, it's not a pleasant subject because a lot of people do not understand, what's happening. When the stock does a reverse split like that and what's happening to their options, they're not able to offset their position because we don't let customers get into or trade adjusted options. So they have to call us. And they're saying, what's going on? I can't get out of this option, and I see that FAS, the price has totally changed, and what's the story here? So, essentially, accounting for that 1 to 5 splits, okay, what the OCC does is they will convert the FAS options to receive essentially 1/5, okay, of that new stock. I don't really, it's not really a good way to put it either. They're essentially now just going to receive 1/5. Of their option contract that they had. So, every option contract that they had before was good for 100 shares. The new deliverable now is only 20 shares. The strike price is going to stay the same. This quantity is going to stay the same. But essentially now the underlying price for their adjusted options is 1/5 of the current price of the FAS quote. The options will trade accordingly. That's why you don't see, $10 calls, also trading higher by a huge price. If there was kind of any opportunity like that, definitely somebody would trade it and equalize it.
Wouldn't that be a nice world where you can just print money on these types of deals like that? It'd all be a happier place for all of us, I think, if these types of things played out that way. Unfortunately, they do not, and all your clients who thought they were sitting on small fortunes are now just sitting on the same amount they had before. But they're a little smarter, a little wiser, and so they're a little bit better for it. Anything else going on in the land of OX? What kind of are you having a lot of interesting paper come across your desk today or anything along those lines?
Nothing unusual, nothing surprising. just kind of like I said, I mean, everything really is kind of, going along with what you guys are saying. It's not, we're not very crowded. We're not very busy all the time. We do get busy at on certain numbers, certain data, big moves in the market, but it's just an odd environment for stocks. I mean, it's, they're very flimsy. I mean, they can go in either direction very easily. So that's kind of, it's very interesting.
It is indeed an odd environment, hence our odd
no
block.
Conviction.
Yes, this is no conviction whatsoever, but we will close out this segment with conviction, sir, just for you. That is going to do it for the old Express Block, and now we're going to roll right into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the show where we discuss what is catching our eye, what we're watching on our screens for the next few sessions. And before I even dive into that, we do have a few names announcing here after the bell. We can give you a live update. I did just come back from the Disney parks last week with the little man, and of course Disney announcing after the close today, and apparently things are all right in the House of Mouse. It closed at $34.60. It's trading about $1, a little more than $1 higher in the after hours. So all is well with Disney right now. It seems to be a bullish trend across the board. We also have NVIDIA coming out after the close. They closed at about 14.5. They're trading about 70 cents higher in the after hours as well. So it looks like, at least the preliminary ones coming out today, that there is a bullish trend. It may lead to another up day today or up day tomorrow. Do you either you guys watching these two or any other ones that are announcing today?
Well, I knew that Disney was gonna blow away their fourth quarter earnings after I found out that you were going there. I just figured.
Well, we're buying a lot of tchotchkes.
Up so much.
The light up spin around things for the parades at night alone that's going to light up their quarter.
No kidding. No, I mean, Disney's been doing some smart things. They regurgitated Lion King into the #1 movie over 2 or 3 weeks. Their Pixar purchase has been surprisingly smart of them, and they're just doing a lot of good things. So it's actually worked out really well for them.
I have a hard time parsing Disney because on the one hand they have so many disparate businesses. If you go to the parks, you look at these things and it's a well-oiled machine. It's like an entire city they're running down there, and it's run very well with a ridiculous attention to detail. And if that was its own standalone business, I'd be strongly bullish. And you have other elements like the Disney, like the Pixar, which you said is strong, even though some of their recent films may have been a little bit lackluster at the old box office. But then of course you have things like ABC that are perennial laggards. Of course, they have some decent shows now, I suppose. But it's a lot of disparate elements when you're looking at that ticker. It's no longer just we call it the House of Mouse, but it is no longer that Walt Disney iconic company. Of course, Disney's been in the headlines a lot lately because after the death of Steve Jobs, that's the other really company that was personified by its founder, and people looking to see what happened in the wake of Walt Disney's death with Disney to kind of try to chart a path for what may happen with Apple shares going forward. Yes, but Disney looking decent after the close. What else, George? What are you looking at for the next couple of days in terms of your own your trading calendar here and around the block? Thank you.
Well, what I'm looking here is I have a kind of handful of stocks, and what they did is they broke out after earnings. They reported good earnings, and they kind of had a little bit of a pop, moved higher up, but then they just weren't able to make further progress. Now, in the sell-off that we had yesterday where the market got killed, a lot of these stocks actually hung in there pretty well. They're still basically what I call the buy zone. So I'm looking to see if these stocks are just going to, just quietly going to drift a little sideways. I mean, look to see if we can get another pop, maybe add into them. But that's actually like looking at those stocks, that's some of the positiveness I see in the market. Despite Apple sort of foretelling doom and gloom.
Any particular names that catch your fancy in that buy zone?
Suspense is killing me here.
Yeah. If you look at something like Under Armour, they came out with earnings, and
I was just looking at them the other day. Actually, I was just mulling Under Armour myself. So maybe we're on the same wavelength there, George.
Yeah. So I'm looking at that. We bought that twice, and I might be buying a little bit more of that again. Mastercard, same thing. Big pop. didn't have such a great close on the day of its earnings, but then it kind of like pulled in, but just it didn't get creamed like the way everything else did the other day. Red Hat, similar kind of situation. Ulta Salon. So here's a big problem why we don't really have a nice bull run. These stocks should have, usually in a normal good bull market, these guys should have been screaming forward at least for a few days afterwards. And we didn't get that. But then on the other hand, they didn't get killed either. They just kind of drifted a little sideways. So I kind of like to keep those kind of stocks on my radar.
Under Armour is pretty much borderline unched here, up a little bit after their earnings, but they've kind of they launched up. They had decent earnings, launched up a little bit, and then immediately, and all the sell-offs kind of gave most of it back. So they're hovering right around where they were going into earnings. So that's interesting performance there from good old UA.
Yeah, but they have some really, they reported a few quarters really strong earnings and really strong sales. Looking forward, the estimates are, although its estimates are just, but they're very strong as well. So I kind of like to keep my eyes on a stock like that.
So Under Armour, and what was the other one there, George? I'm sorry?
Take a look at Mastercard.
Oh, Mastercard, yes.
Yeah, Mastercard, too, had a nice little pop, and then just kind of squiggle around back and forth. But again, the positive side, and when it kind of drifted a little bit lower, the volume just kept getting lower and lower every day. So that to me is pretty constructive, meaning there wasn't a fire sale on it. You look at Red Hat, similar kind of situation, meaning fundamentally strong stock, had a pop, and then just giving it all back kind of after that pop. But then again, just not getting killed. Doesn't look like there's a fire sale on it. So I like to kind of keep my eyes on those because if the market turns up, these should be some of the first ones out of the block, as they say.
Red Hat, one of the few holdovers from the .com days, one of the few survivors of that massive train wreck. I remember when they listed those guys down on the floor of the SIBO, there was quite the frenzy to be in that pit. Everyone thought Linux was going to be the wave of the future, and their form of box, I suppose you can say, or software and services model was going to be the wave of the future. And it never really caught on fire, but on the other hand, it is a stable and company, which is a lot to say coming out of that 2000 debacle, that they're still around and profitable all these years later. They're doing something right over in Red Hat.
Yeah, I was pretty surprised that it even came across my screens because I was thinking the same thing. That's one of those older companies from the 2000s, but I'm like, hey, they're looking pretty good, so let's not hold any biases towards it.
So, George, you're saying if you had your own little technical system right here, all the green triangles would be pointing up for these stocks then. If you were manning the booth at the old, I won't say the name of the show, but if you were marketing your technical wares, you would be buy signals on all of these stocks.
Yeah. Unless of course they were to break down. But right now, yeah, they're viable. They're in a viable zone here for me.
And Mr. Sebas, aside from picking up some units, a hallmark, a throwback to the top of the show for the savvy listeners there. But I'm laughing again. All right, Mr. Sebas. Aside from picking up net units here in the S and putting on some ratio downside put spreads in GMCR, what are you watching in your around the block screens for the next few sessions going into the weekend?
I'm actually looking at a lot of things. Oil's been on a real nice rally.
Yeah, all right.
I think that's Iran linked. I think that TLT. I'm watching interest rates. TLT is starting to get really lofty. I was doing some math, and TLT at 130 means that the
scary way to start off a sentence. Mark Sebastian says he's doing math.
I know. TLT trading at 130 is basically the equivalent of the 30-year trading at about $1.50, which would mean interest rates, the long bond below 3%. So as it rallies and rallies and rallies, something I'm really looking at is starting to really. At some point, you got to start shorting some of the credit here, and it's going to hurt you for a while. But I don't see how long TBT, short TLT, different things like that are starting to look interesting to me.
This reminds me of a discussion we had back in July with our good friend Tony on the live show, and he was discussing shorting bonds back in July. I'm looking at the chart here.
Sell of the decade, I think it was.
I think it
right?
was. I think
John and I will look at each other every week and just
make
say,
his money back if he hangs on long.
Yeah, if he can hold in long enough, and his creditors will allow him.
Yeah, but there's other things. I think this Italian mess is really I'm looking toward the S&Ps to touch 1,200 before we really turn around.
I'm even more pessimistic than you, sir. I think there's a contagion. The wildfire is spreading over across the pond.
Oh, yeah. Well, I've
been saying that for a while, though. So
I know.
I have my units in my back pocket.
The thing you've got to remember, Mark, is everybody is hedging right now. Like, when you've got an environment where everybody is buying up hedges, that actually causes the market not to drop as much. Because people hold their hedges and they say, "Oh, I'm hedged. I got nothing to worry about. Hedge." And it actually provides some a lot more stability in the marketplace.
I believe they also say it in that southern accent as well, which is very
hedge. I'm fully hedged with I done bought me some S&P 500 puts against my E-mini futures that I'm on.
It wouldn't be an option block if we didn't offend some segment of the country. And today, Appalachia.
My Nazi joke is probably going to need to be cut.
Appalachia is tuning out en masse right now. You can.
And the Michael Jackson. Don't forget him.
That's true.
I did make a Jackson reference.
Mark Sebastian keeping our offensiveness quotient up for the show. So we thank you for that. That is what we do. And speaking of what we do, we're going to close out this episode of the Option Block. I want to thank all of my partners in crime for joining me on the show today. Starting off with you, Mr. T-Nav. Let's see if I can catch you off guards again. What is coming up in the land of OX you want to let our listeners know about?
Yes.
No. I think no is the appropriate response this time.
What's that?
I think no is the appropriate response this time.
Okay. Yeah, we do have some webinars, and we have some events as well. There is an event on the 18th of November in Las Vegas. It's the Traders Expo. We have an event there at 6:45 p.m. to 8:45 p.m. So if you're in Vegas, if you're at that
Am I invited?
expo, sure. Yeah.
I thought you were going to be heckling from the audience.
Well, if Tim Navabi's there, then I'm going to be there. That's what I said.
Poor Joe Cusick. He has to spend his. He has to get some.
Never been to Las Vegas, Tim?
I've never been to Las Vegas. No.
How can you have been in and around? How can you have been in and around this business for as long as you have and not have been dragged out to Vegas at one time or another?
What is wrong with you?
Yeah, I don't know.
You know, I used to take trips to Vegas and just stumble over people that I stood next to in the SPX pit, just randomly in the casinos and bars. That's how dense it was with Chicago traders out there back in the day. Anyway, that is a true story, by the way. I won't say who I stumbled over in the basement club of the Hard Rock. Anyway, go ahead, Tim. That's a story for another day and another show.
Sure. And then there were two interesting webinars I just wanted to bring up. One of them is on November 16th. That's at 4 o'clock Eastern, titled Agricultural Markets, Frenzy, Fundamentals, and Trading Ideas. That's one of them. Then the other one, kind of might be important here, is on the 22nd of November, Intro to Options, Part 4, The Long Put. That is at 9:30 Eastern Time.
That's the one I've been waiting for.
Yeah.
Tune me in. Count me in for that one.
Definitely.
The long put.
I can't wait for that.
Good stuff. I don't even want to know where Sebastian's going with that, so I'll just preempt him now and say, Mr. George, what is coming up in the land of KYO that you think might interest and/or intrigue our listeners?
Okay, well, this Sunday night at 8:30 Central Time, Mike Tusaw will be hosting a webinar. It's going to be a webinar on how to hedge a stock using options. So
could it indeed be the long put? 2 for 1 for our listeners.
That's Mike T's going to do that, and you can access that actually from the Options Express website, optionsexpress.com, at 8:30 Sunday night.
George, when are they going to let you loose on the old webinar train there?
I don't know. We get kind of so busy with things, and we have to kind of sometimes, hey, what are you doing, and what are you doing? Even though we're here in the office, sometimes I think we need to say, hey, what's going on? Sort of like find out what the left hand, what's the right hand doing, what's the left hand doing. But no, I'm just kidding around.
We call that the stranger.
Yeah.
Yes, there goes our clean rating for iTunes for this episode. But Mr. Sebastian holding court as usual with the offensive terminology. But last but certainly not least, Mr. Sebas, I know you, little birdie told me you may indeed be out in the audience at that Las Vegas event. Listeners should go check out Mark Sebastian at the upcoming Traders Expo. I believe the dates are the 18th and 19th of November, sir. Is that correct? Oh, can't even hear that. Ooh.
Yes.
Yes. So if you go out to check out the OX show, you should check out Mark. He'll have a booth there as well, where one lucky visitor will win the new Kindle Fire, because Mark is such a diehard Apple hater. He refuses to give away an iPad. He will give away the Kindle Fire, though, so you can be one of the first on the block to check out that fun device, as well as all the other fun stuff that Mark and Andrew are cooking up over at Option Pit. And by all means, surf on over to theoptionsinsider.com. Check out all the different articles and comments and analysis we have up there, as well as our news ticker for what's going on in the land of options, as well as all of the fine programs here on the Options Insider Radio Network. And that is going to do it for this episode. I want to thank all of our listeners out there for downloading and streaming and subscribing to this show and making it such a success. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.